So, want to welcome everyone here. We are on episode 6 of our podcast. Today we have Manuel Corral here from the Corral team. Welcome, Manny. Thanks for coming.
Thanks for the invite, man.
Yeah,
I appreciate it, guys.
Yeah. And as always, we have Jason here. And
Happy to be here.
We want to talk a little bit about the market. So, I guess we're kind of dealing with the same things: little stubborn interest rates, low inventory.
Mm-hmm.
I guess a new tidbit that I've noticed that come up recently is the talk about home insurance, and that some people are running into.
It's been an issue.
Yeah.
And I've had a couple of people I work with. They've had escrows fall out because of they cannot get home insured, and
Right.
so it went all the way up into the very end, and they just couldn't find a way. Especially if they have any claims on their home insurance, it makes it even that much more difficult.
Yeah.
So how it affects our end is I probably opened 6 escrow this year, being in the backup position. So I'm encouraging clients to continue to write offers and put ourselves out there, because with combination of rates and home insurance, you never know what can happen.
Right.
So,
It's been interesting.
Yeah. What have you been seeing in terms of the market?
Well, in the past, we always used to use a set formula, a certain price. We knew the homeowner's insurance generally was going to range in a certain, range. Let's just call it $100, for example, to $125, maybe $150, depending on what your price range was. I mean, if you're buying a $2 million house, it's generally $3,000 a year.
Right.
It depends on where that house is located. If you're buying a home that's north of $1 million, it's not unheard of right now to pay $4,000 a year for insurance.
Wow.
Just take an average sell. Let's just say $700,000 purchase.
Okay. Yeah.
Typically, it'd be about $125, maybe $150 a month, because of California's mortgage insurance rates. They're outrageous right now. They're the highest I've ever seen in my life. And I think the insurance companies are poised to make a lot of money, although they would say that it's costing them a lot of money because of all the fires in the past years.
Sure.
But I think that unfortunately they're going to take advantage of some of us. Sad to say, but the truth is insurance premiums are up.
Right.
In my own personal neighborhood, my own insurance is $6,000 a year.
Oh, wow.
That's a lot of money.
Yeah.
And it was about 1/3 of that when I bought the house 7 years ago.
Right.
So it just gives you an example. But insurance is expensive. So the challenge is, as a lender, when you go and I qualify, let's say you guys are buying a house together, and if the insurance is $125 or $150 and now it's $200, sometimes the qualifications are so tight that, man, that extra $50 you would think is not a big deal, but it is.
Interesting.
And then if you have a rising rate environment on top of that, you really get pushed. So we're having to take a very conservative approach right now.
Because they get a price
Up front, you have to.
Right.
You have to be able to build that in as a buffer.
Right.
If you don't, then you might run into problems, and then now your buyer doesn't qualify, you have an issue.
Yeah.
You don't ever want to put a client's deposit at risk when they're that far into the game.
Right, definitely.
You'd rather know now.
Yeah.
And so you guys know, because we work together, that we're going to build out a certified mortgage plan and then insert the homeowner's insurance, so we can see that up front and give those payments to the homeowner up front when they're making offers.
Yeah.
Not finding out at the 11th hour, well, then you can't get insurance.
Which I've been seeing.
First of all, you need to get the insurance quote within a few days
Yes.
of making an offer.
Yes.
You just have to.
Definitely.
Because you don't want any last minute surprises.
Right.
That's just not going to bode well for the seller or for the buyer.
Yeah, I had one person I work closely with. She had an escrow they had several extensions. So like on the 45th day, they just could not get insured, and they had to cancel. And so that's unfortunate. And then we're talking about that buffer. If a client's pre-approved for about 800, I'll always advise, let's look at 675 to 750, and then we want a little buffer on top just to negotiate it.
We're not in the market where. So in this market today, if you have a buyer that's really pushing their qualifying ratios, that's not a good position to be in right now.
Yeah.
The reality is we don't want to make it that tight. We want a little breathing room.
Right.
Yeah.
So as we go forward and we work with our consumers, man, we can't have it be that tight where there's no. If the rate goes up an eighth, you don't qualify.
Right.
What are we doing? We can't do that.
Yeah. And I've had, we've worked with one that was really up.
Yes.
Fortunately, we're already in escrow, so we can just walk
right.
it right there.
Right.
I can't even imagine shopping over a good amount of time with something like that.
There are some areas, if you're buying what I would say, in a city, maybe let's say Ontario, where it's just level, it's flat, there's not a lot of hills. It's not as bad as if you're buying in Chino Hills or you're buying in, let's say, the foothills of.
Because our foothills were all like right.
Oh man, Pasadena, Altadena.
Yeah.
Oh my God,
So
forget about it. It's ridiculous.
Yeah.
So yeah, that's definitely a big topic of conversation there.
Yeah, we have to build that. We have to be smart about how we run our business, and we have to be smart on how we coach our buyers.
Yeah,
right now.
Definitely.
Absolutely.
Definitely, yeah.
Yeah.
What are you seeing, Jason?
You know what? I've actually been seeing some buyer pullback recently. So I've been doing a lot of showings, and from that, I've been getting a lot of like follow up from agents and seeing properties sit a little bit longer. And I guess this time of year, maybe people are going back to school. So I've been really, letting my clients know, like, hey, you know what? Let's go out there and look. Right now, competition has slimmed down a little bit. So. Yeah, I mean, really, that's what I'm seeing. But, it varies by location. I have a lot of people looking in, like, La Mirada. So it's a hot, kind of like a very sought area. One property, I had, like, a cash offer, and they didn't go for it. It was pretty strong.
Wow.
But, yeah, I mean, just some homes specifically, and then are moving, but, like, right up the street. One's been there for at least like 40 days now. So it's all circumstantial, this market. It's like,
I think if you find the right property in a good city, it's going to move and it's, appealing, you're going to get multiple offers on it.
Yeah.
There's no doubt about it. But one of the things that is slowing down a little, like the activity just slightly, because we still have a great buyer demand out there. I mean, we have a buyer demand for the next 4 years.
Yeah.
We have a backlog of buyers.
Inventory.
Stemming from COVID to this day. And interest rates, too, have slowed things down a little bit. But nevertheless, if rates dip below 7% and they get into the mid-6s, we're going to see multiple offers again. And we're still seeing multiple offers in some cases. But as rates rise above 7%, it's actually easier to get your offer accepted. If I was a consumer right now, I'd rather buy now, buy in the right community, the right neighborhood, right? Negotiate the right price with a realtor like yourselves who actually know how to negotiate a contract. And then come back in 6 months, a year, 18 months, refinance into a lower interest rate and a lower payment.
Absolutely.
That's a no-brainer.
Yeah, absolutely.
I mean, why wouldn't you do that? Especially all the data that we're getting right now is forecasting appreciation up until 2028. So why would you not want to get in now, build some net worth, and refinance in a lower payment?
Yeah.
When there's less competition.
Yeah, absolutely. I met with a client out in Pasadena this morning, actually. And it was the first time where we had a serious conversation about submitting an offer for the first time in a long time under asking.
Wow.
We looked at the property and the situation. They're very motivated. It was a trust sale. He said, "What do you think about going under asking on this one?" I said, "First time in a long time." I said, "I think they would consider it." I think in that sense, in that area.
One other factor is when you guys were growing up and going to school, we didn't go back to school until Labor Day weekend.
Right. Right.
Now kids are back in school the first week of August.
Yeah, my kids started school this week.
So there is that little bit of a lull after the kids go back to school. There's school shopping and buying supplies, and it takes the attention away from home buying for a moment. But I think September was going to be a good, strong month leading into the last quarter of the year.
Right. Yeah, definitely. Awesome.
Yeah.
So I think one thing I wanted to talk about in such a volatile market. Things are changing all the time.
Right.
And we work with people who come with their own lenders.
Yes.
They come with an online lender. They push a button. Versus maybe some services that you do. You're more of a full service educator, not only up until the pre-approval and closing, but after the fact. So maybe you could tell us a little bit about that and your philosophy.
I will. I'd love to. So I made a decision. It was probably 1995. It was a long time ago. But I made the decision as a loan originator, I didn't want to be average. I wanted to be elite. I wanted to be, at the highest level in my field possible. And so from that point on, I've been on a journey to educate myself at a very high level. The best loan officers in the country invest in themselves, and the best realtors in the country invest in themselves. They invest in their education, right? And I invested in my education so I could advise my buyers at a very high level. So that's very, very important. And that's what I've been on a quest to be able to do. So in regards to your question regarding the market, unfortunately in our industry today, it's press a button, get a mortgage. So when my customers come in via, Zoom or in person, I'll ask them, hey, Jason, how much time did you spend with the last lender? Oh, yeah, I was working with an online lender, my credit union. I said, how much time you spent? 15 minutes. What did you learn? Nothing. I didn't learn anything.
Right.
And not only have I asked that every single time.
Yeah.
Why do I do that? I do that because I want to gauge how much information they were able to get from their bank or their credit union. By the way, no knock on credit unions. I belong to 2 credit unions. I've been with my bank for over 20 years.
Sure.
Okay.
So, time and place.
Right. For the right product or whatever whatever service I need. But when it comes to home loan, I truly believe that you need a lending professional.
Definitely.
Somebody who's educating themselves at a high level, they can advise you at a high level. Because it's super important, because there's a lack of education right now in our business. Because if you're a lender, it's too easy for you to try to do something in 15 minutes. Hey, go to my website, and we do that too, but we do that after we've educated the customer. Okay? So go to my website, plug in your info, and give me all your paperwork, and I'll get back to you in 3 or 4 days. Or if it's a credit union, sometimes it's 2 weeks. Or, because they have to have their manager look at it, right? And I'll get back to you what you qualify for. Well, you're not even competing at that level.
Right.
So in order to compete in the real world, you have to be able to educate the customer at a high level. You have to be able to give them great advice, great strategies, prep them so they can compete to get their offer accepted, work with a great realtor like you guys, team up to do the discovery call, the consultation, come in with great financing options, show them which options are the best options, mortgage insurance, no mortgage insurance. Should we take, a loan with less costs and points to do the loan? 1 point, 1.5 or 2.
A lot of things that they weren't even aware of.
They're not even aware of this. And then can you actually show them how long they have to be in the loan to make their money back?
Right.
After we do all that, we're playing the game at a different level.
Yeah.
This isn't about pressing a button, get a mortgage, learn nothing.
Yeah.
This is about educating you so you can make good decisions for your family in the future.
Yeah. I mean, I like that part, because it's not even just for this transaction. It's for life.
No, because I showed you guys a few minutes ago how a client can take a certain amount of, let's say, dollars and allocate that to paying down their principal. On average, if you just allocate $500 to your mortgage, you'll save about 8 years off your mortgage.
Oh, yeah.
Okay, so take 8 years at $5,000 a month or $4,000 a month. Do the math on that.
Yeah.
This is about coaching clients on how to build more net worth and create more wealth for themselves.
Yeah, that's amazing. So, I mean, I've personally sat through a lot of those presentations, and I learned a lot. My clients, definitely, our clients appreciate that a lot.
We've worked our whole lives to get to that point where we can coach people at that level.
Yeah. And also just seeing how you operate your team at that level and yourself. And just makes us also want to always be educated. And
you have to find a way to be relevant to your clients. If you're not, you're just another number.
Right.
It's sad to say, but it's so true. You have to be impactful.
Yeah.
So that's how you do it.
I love that philosophy. And that. I think we both try and.
Oh, you guys are professionals, of course.
I mean, going back to what you were saying, I did have a client that was pre-approved by a credit union.
Yes.
And so I started asking her questions. I was like, "Oh, so are you FHA or conventional?" And she didn't even know. And she's very intelligent. She's got a master's, and not knowing that she didn't know what kind of loan she had with her credit union and why I saw her rate was higher.
Yeah.
So I was like, "Oh, this looks not good."
Well, it's not a knock. I love credit unions, by the way. I've been a credit union member for many, many, many years. Serves its purpose for the right type of, an auto loan, whatever maybe a home equity line of credit, whatever. But they're at a disadvantage. They offer great rates and they love their members. I get all that.
Yeah.
But this is about having an educated loan officer that's a seasoned professional work with you and being able to advise you at a high level.
Right.
When you work for, in many cases, a bank or a credit union, they only teach you what they want you to know. As a professional loan officer, if you were my relative and you said you want to get into the loan industry, I'd say that's a great place to start, but you're not going to learn that much there. In my world, I can go to the best seminars, I can get the best coaching, and I'm allowed to.
Right.
because I'm paying for it. I'm dictating the pace of my growth of my learning. There, they don't want you to really know anything other than what they teach. And you can't flourish as a loan officer. You have to step out of those boundaries in order to grow in your career.
That makes sense.
You just have to.
Yeah, that makes
I started in the banking industry in 1985.
Oh, wow.
Yes.
Yeah.
I learned, you learn from there. I learned a lot. I was working for the time Home Savings of America at that time in the middle 80s. They were the best in the business. They had a great training program.
Yeah.
But it was either their way or there wasn't any other way.
Right.
I worked at Great Western Bank as well. They just taught you what you wanted to teach you at Great Western Bank.
Sure.
And I have friends that work at every institution, Citibank, Wells Fargo, B of A.
Yeah.
They don't allow them to go to the best seminars.
Wow. That's interesting. I didn't know they didn't allow you to.
Well, they definitely won't pay for you to go. I can tell you that.
Yeah.
You probably have to take some time off to be able to do that.
Got it.
Ultimately, they only want you learning their products.
Gotcha.
And that's it.
Gotcha.
Typically.
Okay. That makes sense. One other question I did have was with all the talk about the student loan forgiveness and payments coming back.
Yeah.
How are you anticipating or seeing how that changes the equation for a lot of people?
That's a great question.
Yeah.
We've been kicking that can down the road for 3 years.
Yeah. And it's finally here.
Well, we all knew it was going to happen.
Right.
And I mean, there's a lot of people that have been paying on their student loans. I think those are smart people to be able to do that. And some took advantage of not paying, but now they're going to have to end up paying.
Right.
There's millions and millions of dollars of debt, trillions of dollars of debt that has to be repaid. If you had a $150,000 student loan that you haven't been paying on for 3 years and now you're going to have to pay, that's going to affect your home buying power,
right?
Perhaps, right? Because even if we qualified you with that debt, you weren't writing a check for that debt.
So you didn't
now
have
if you're
minimum payment.
Right. So maybe that payment's $1,000 now.
Yikes.
Or even if it's $500.
Yeah.
You haven't been writing that check.
Yeah.
Now you have to write that check.
Right.
We're going to have to take a second look at what you can manage monthly, right?
Sure.
What I always tell people is what you can pay is going to determine where you're going to live,
right?
Your neighborhood and your community.
Yeah.
Now that's going to be a factor. So it's something that we're going to have to deal with.
Okay.
Yeah, for sure.
Have we been seeing that already, or is it on the horizon?
Everybody I've been speaking to is talking about September to October 1st.
Got it.
Quite a few have been getting letters indicating that October 1st their payments would actually start.
Got it. Okay.
And so what we're seeing is there's different types of plans. You can always go get a payment repayment plan based upon your current income.
Yeah.
So I would say if you're a consumer, take a look at all your options. What we're basically having to do in the loan industry is take a look at what it's going to take to fully amortize that repayment period. We were taking, depending on a product, 0.5% of the unpaid balance.
Oh, wow.
So if you had a $50,000 student loan, we're only taking $250.
Oh,
Okay.
Yeah.
If it's different types of products, down payment assistance, it's 1% of the unpaid balance. So if you have a $180,000 student loan, it's $1,800 a month.
Oh my God. Yeah.
So we better rethink our strategy in that case. So
right. Got
it's here.
Yeah.
It's here.
So I know that's been coming up, but that's great to know.
One thing that I would like to add is that consumer debt for credit cards is at the highest point it's ever been in this country. I want you guys to think about this right now.
Yeah.
Like over the years of my career, we would always do X amount of refinances per year. If I made you a home loan, Jason, let's say that you've accumulated some debt since you bought the home. You fixed it up, you remodeled the kitchen, you went to Lowe's or Home Depot, and now you have $20,000, $30,000, $40,000 worth of credit card debt. Well, you would come to me and I would be able to refinance you. Okay, now, but if I made you a home loan at 3.5% and the rate is 6.5%, you might not want to include that debt or refinance because you want to hold on to your interest rate.
Right.
Well, those people haven't been able to refinance. And that pent-up demand is just growing.
Wow.
Huh.
When rates come down, we're going to be doing a lot of debt reduction.
Right.
There's a lot of consumers right now, and the average interest rate's over 20% on a credit card.
Yeah. It's crazy.
Yeah. So that's something to keep an eye on right now. And if you're a consumer, man, please keep your credit card debt to 10% of the max credit line to get the best credit scores right now.
Right.
Yeah, for sure.
So 10% is the.
Oh yeah,
is the
that's
line.
golden, man.
Okay.
I mean, 33% is great.
Right.
25% is even better. 10% is ideal.
Gotcha.
Yeah.
Okay. Yeah. And I noticed people will pay off some of the credit card debt when in escrow to make.
Well, we're doing that a lot
Yeah.
right
'Cause I've
now.
been seeing that.
Yeah.
Well, speaking about the insurance, right? Because the insurance is higher. We talked about that earlier, and rates have moved up.
Mm-hmm.
We have borrowers that are in escrow right now that were credit approved,
Mm-hmm.
fully underwritten, fully approved, that we have to re-underwrite because of the insurance premium or because they've added more debt since that time.
Yeah.
And so we're having now to go back to borrowers that are paying down their credit card debt in order to qualify.
Right. Gotcha.
Yeah.
Okay.
That's a big deal.
Yeah, it is.
Yeah.
Wow. Yeah, that's really good to know.
It's in our business right now, it's a fluid situation.
Oh, yeah.
It changes weekly.
I was gonna say week to week things
Right,
that
right.
you have to look at, and there's so many
Right.
moving parts right now. So
Yeah.
I think it's all the more important to have like a really good loan
Yeah.
officer
Yeah.
to educate and keep an eye on things.
Absolutely. And the loan officer has to be knowledgeable about the market.
Mm-hmm.
One thing that I'll share with you that I'm going to be sharing next week at 2 office meetings is that 2024 and 2025 are going to be banner years for real estate.
Mm.
The market's been solid, but it's going to be fantastic. We're not talking about just a good year in real estate. We're talking about 2024 and 2025 being two of the best years in decades.
Well,
In
that's
2020 and
fantastic.
2021.
That's fantastic news.
I'm excited.
But let me explain why.
Yeah, I'd love to.
Let me explain why. So I'm a baby boomer. Okay.
Mhm.
Everyone knows baby boomers have been buying homes since the 1980s. Okay. In the 1970s. And we bought homes for decades.
Mm-hmm.
We bought homes. We have bought move-up homes. We bought rentals, vacation homes, et cetera, et cetera.
Mm-hmm.
And so people have made a lot of money following the baby boomers. Whether you're in insurance, you're selling homes for a living, you're doing loans.
Right.
Baby boomers have supplied this industry with tons and tons of wealth. Well, the next set of buyers from age 26 to 34 are going to be coming through.
And millennials.
50 million.
50.
50 million millennials. Household formations. When you leave your parents' home, that's a household formations. We have 50 million right now. We have 50 million possible homeowners coming down the pipeline that are going to create new wealth for generations for us. And they're coming to the market in 2024 and 2025. And guess what we don't have? We don't have the inventory. Now, hold on. We don't have the inventory. When rates come down, and we're projected to have lower rates, should have already come down.
Right.
Okay, they will come down. When they come down and we don't have the inventory, then hopefully that'll create some inventory.
Right.
Okay. For example, if I had a 3.5% rate, maybe I would sell my condo to
Right.
get into a home at 4.25%.
Sure.
That's probably a no-brainer.
Yeah.
Okay, we have a lot of those people that would love to be able to do that right now. But we have pent-up demand. That's going to come to the market. This is why you cannot wait to buy a home. You must and you should buy a home because of the net worth that you're going to be building.
Right.
I had somebody just say to me the other day, they're going to wait for a year.
Yeah.
They'll probably lose out on 10% equity.
Yeah. Right.
They'll come back with a lower rate, but prices will be higher. Okay? And so at the end of the day, it's still going to drive up the payments. So there's a lot of people that are thinking about buying, considering buying, even though rates are elevated. I'd rather buy now, create my net worth, come back, refinance my payment, save more money, maybe even take that and apply it towards a mortgage.
Right.
Save $300,000 or $400,000
Absolutely.
over a 10-year period.
Yeah. Yeah.
So that's the next wave that's coming.
Okay.
And we need to be prepared. So if a consumer says, why I should buy right now, that's the reason why you have to buy right now. Because the next 4 years are going to be gaining equity every year.
Right.
Because we're not going to have the supply.
So this next wave of households,
50 million formations.
How do you think that we can help them with the affordability issue?
Well, believe it or not, millennials are banking on two things: trust and brand.
Trust and brand.
So you better have a good brand, and they better be able to find you.
Gotcha.
Your Instagram, your Facebook.
Right.
I had a young couple, probably 32, met me for the first time a couple weeks ago. It was on a Saturday morning. And I don't hear this often, but I hear it occasionally. She said, "We researched you.
Oh.
We checked out your Instagram."
Yeah.
She said, "We saw that you were open for business."
Right.
Listen to what she just said. My Instagram said, "I'm open for business." There was tons of content on there.
Right.
Your Facebook, your website, whatever it is you're using, right?
Yeah.
People are just checking out to see if you're in business.
Right.
Yeah.
Daniel, Kim, are you in business?
Yeah.
Right?
Yeah.
Are you guys functioning as a team? I mean, what are you guys doing?
Right.
How do I find you guys?
Sure.
Can I find online reviews?
Mm-hmm.
Like Yelp or whatever have you.
Right.
So they're checking us out before they come and meet with us.
Yeah, that's a great point. I spent some time. I mean, it took me a while to kind of like get all that together. So many channels.
Right.
So we had the coaching, and then I actually just had them help me out put everything together. Since then, it's I think it's helped a lot. So
but
there's a lot more to our roles than just selling real estate. We have to be great marketers and
educators.
I say this. I used to just be a loan officer, but now you have to have a coach for social media. You have to have a coach for the business, and you have a coach for how to run the business. And, and we're coaching our consumers.
Yes,
because that's all I am, is a glorified coach.
Right.
I'm just coaching our consumers.
Yeah.
So help them make good decisions.
Mm-hmm.
You have to be part financial advisor, part lender, part whatever.
Yeah. There's a lot of different hats you wear, but that's the same kind of mentality I wake up with every day. How am I going to help and coach whoever I run into today?
Yeah.
And then hopefully they make the best decision, most educated decision
for sure
they can make. Yeah.
In the future, it's going to be about us bringing value to our consumers.
Yeah.
If we can't bring value to our consumers, they'll just use somebody else.
Right.
That's it.
That's competitive market.
And the value doesn't mean you're the cheapest commission or the cheapest loan officer.
No.
Sometimes it's about being the best and the quickest to respond.
Right.
Because what I tell people when they're making offers, it's not always the highest win.
Mm-hmm.
I mean, the highest bid that wins.
Yes.
Okay.
Yeah.
It's sometimes speed to respond.
Right.
How fast can you close?
Yeah.
Because if I can close you in 15 days, but somebody's offering $3,000 more, but they need 40 days to close, it's no contest. The seller's going to take my offer every single time.
Right.
Because I can close fast.
Right. Yeah.
And that's the bottom line.
Most definitely.
Yeah. I think everybody in this market right now, buyers are very qualified. They have those kinds of advantages right now. Because we're competing with like people doing 17, 21 day closes, 10 day closes. So really it's us two building that rapport with the other agent too. Selling our family, their circumstance as well. That's also a big part of it.
Yeah. 100%.
I had a customer come in and meet with me the other day. It was an eHomes referral.
Mm-hmm.
And the customer brought in the uncle. And the uncle's, older gentleman said, well, we're not going to run the credit right now. We're going to wait till we find a home.
Mm-hmm. I hear that a lot too. Yeah.
And then we'll figure this thing out.
Mm-hmm.
I said, if you do that, you have no chance of winning.
Yeah.
Right.
And he looked at me.
Yeah.
He said, what do you mean?
Mm-hmm.
I said, speed to respond is everything.
Yeah.
I said, if you are going to wait till that happens and then come and seek my advice, and we're just going to all of a sudden throw it up against the wall and have it stick, somebody else that has a game plan together is going to come in before you even can finish the paperwork and have that offer negotiated and opening up escrow. And they'll be the first in line at the escrow company to deliver their deposit check.
Right.
They're ready to go. They're hungry. If you're not in that position, how could you possibly win?
Yeah, right. Absolutely.
Yeah. So he changed his tune pretty quick.
Yeah.
Well, it's good that you let him know that. Yeah. And we talk about how quickly homes are turning.
Yeah.
You have to have everything in line. Otherwise, when we do find that perfect home, it's going to be gone.
Yeah.
It's, maybe 4 days on market, sometimes less. It's just.
Our clients need us, guys.
Yeah.
They really do.
I get the credit pushback inquiry all the time. Like, hey, you know what? Like, what credit utilization, payment history, those things matter. Your inquiries, not as much, right? What are you going to leverage your credit for right now? Are you going to buy a car?
Right.
Like, what are you doing? Like, let's do it.
Yeah, this is why you have saved up your credit.
Yeah, and if anything, I can tell you what you should be paying down to put yourself in a better position, right?
Right.
Or many.
Yeah.
Yeah.
Well, the credit report's just the X-ray.
Yeah.
Mm-hmm.
That's all it is. Right?
Yeah.
We just can take a look at the playing field and be able to advise you on debts you can pay down to increase your credit score.
Sure.
That's big.
Yeah.
We do that every day.
Yeah.
Like every single day. We do a what if a credit scenario, right?
Mm-hmm.
What if scenario. And you can take a buyer right now. I have a buyer that's an eHomes buyer. He's 670, and if we move him to 680, I can see him over $100 on his mortgage insurance premium.
Oh wow!
So I said, here's the motivation.
Yeah.
And so he said, let's go.
Yeah.
So we're doing it.
Yeah, amazing.
Yeah.
Yeah, amazing.
It's the advice that we give our clients.
Yeah, definitely. So I think.
And the credit report's good for 120 days.
Okay.
It's good for 4 months.
Yeah,
A lot of consumers don't know that.
Right.
We don't have to pull it every month.
Yeah.
It's good for 120 days. So there you go.
Yeah, I think that's an important thing to
Definitely.
reach out. So yeah, I mean, that was a lot of really good information here today.
Oh, thank you.
Do you have any other questions, Jason?
You know what? I was gonna ask you right now, in terms of what you're doing in volume, what are you seeing is most popular, FHA, conventional, or refis?
Well, refi business is at an all-time low for me
Right.
because of the elevated interest rates right
Mhm.
now. Ask me that question in 18 months and it might be 95% of my business.
Yeah.
But today it's 95% purchase. What are we seeing in the marketplace, or what are we seeing as far
Like,
as
in the purchase, like, are people doing more conventional
Okay.
or FHA?
Got it. Well, it depends, right? I mean, if you have credit scores that are north of 720, you're probably going to be a conventional home buyer, unless we need to stretch your qualifying ratios. Then we would be FHA. Because FHA allows us to stretch the buyer's qualifying ratios. You can have a 780 credit score and still utilize FHA,
Right.
especially if we have to push your price point up, okay? Because you want to get in a certain school district,
Mhm.
better neighborhood, better community. If you're an FHA buyer, typically you're going to be 680 or below, and even at 700 or below, many times FHA is going to be the ticket. It really just depends, which is why you need a professional consultation,
Right.
a professional loan officer to help you determine which method would be the best method for you based upon your credit scores, your down payment, and your ability to pay, and your debt to income ratios, of course.
Right.
It's a great question,
Yeah.
but it varies.
Yeah. Awesome. That's good to know. Well, Manny, I'm sure people here would love to maybe reach out to you. If they have any questions, what's the best way for them to reach you?
Yeah, cell phone number is 951-522-4793, and hopefully you guys will put my email address.
Yep. And then we'll tag your
the screen.
tag your
There you go.
Instagram as well. Yeah.
There you go.
most
Make
definitely.
sure they know you're open for business.
There you go, right?
Yeah,
Yeah,
there
there
you
you
go.
go.
Yeah.
Well, I appreciate you guys giving me the time.
No, excellent. And we hope to have you back again soon.
Love to do it.
Yeah. Yeah.
Absolutely.
Appreciate you so much for coming.
Yeah.
And until next time. Thank you.
Appreciate you guys.
All right. Thanks.
Have a
man.
good day.
Thanks.
All right.